This is episode 99 of Zen and the Art of Real Estate Investing with my guest, Aaron Letzeiser. Aaron is the co-founder and COO of Obie, a venture-backed insurance and risk management technology platform serving primarily real estate investors in the U.S. In addition to his work as Obie, he is an active real estate investor and a venture partner at Pioneer Fund. Aaron, welcome to the show.
Thanks, Jonathan. Thanks for having me.
Yeah, I'm excited to talk to you, and I like going into the different intricacies of what investors need. But first, I want to start with your journey. When was the first time that you were interested in real estate as something that you might buy in the future or just, interesting to you?
Yeah, I mean, I got my bug, fortunately. Obie was co-founder with my brother, Ryan. His background was real estate private equity.
Okay.
Kind of climbed the ladder from renting out his first condo, right? The accidental landlord and going to the first home. Don't want to sell the condo. The rent can cover the mortgage and the expenses, right? Again, I saw a mentor in the space, and then slowly over the course of several years grew into several housing unit portfolio with a couple of partners. So that's where the bug started with me. I certainly never had something that big, but really the same type of progression, right? Started with a small condo unit. Good area, a place that, I had lived in and put some investments into. And
yeah, where was that first investment?
The first one was in Chicago, actually, where it's still located today. We still have a small portfolio, even though Obie takes up most of my time, around primarily the Midwest, although we've got some stuff in Charlotte, North Carolina, as well. Big fan of the Carolinas and where that market's going. But yeah, I mean, got the same bug, right? Like something that was small and easily manageable. As long as the HOA is not too bad, right? The sneaky special assessment can be a good way of people dipping your toes into the water, right? Like understanding the challenges without needing to also go mow the lawn.
When you guys started to branch, did you at some point branched outside of Chicago? Obviously, you had so many units. How were you assessing the markets outside with you and your partners at the time? And then we'll get to how this all transformed into Obie.
Yeah, I mean, good growing spaces. Some people swear by like the Starbucks development map, right? Like,
it's definitely relevant. Yeah.
Yeah, I mean, if you think about it, like these Fortune 500 companies employ large global real estate teams, right? I mean, they are doing your work for you. What are other ways of you Tom Sawyering your approach to a lot of this stuff? Whose market research can you piggyback off of?
Right.
So yeah, I mean, we started in Chicago here. It was a market that we knew. If any of your listeners are in the Chicago area, the West Loop area of Chicago was certainly developing. Google put in an office here probably like 5 to 7 years ago. And that was a great indication of people moving a little bit outside of the downtown. Google Cloud then added, you had some other people. BCG opened up a headquarters here. McDonald's moved their headquarters downtown, but in this neighborhood. So
I just read something though. Chicago over the past like several years has been the one like in the top 5 for markets that's maintained, in terms of price and everything, just across the board.
It does. I mean, even in the current market, and even some markets are having a bit of a price correction. And for as egregious as the property taxes in Illinois are, if you can get something to pencil here, there you don't see the swings, right? You don't see a ton of appreciation over a short period of time, but you also don't see a lot of depreciation.
Yeah.
So if you can find something that pencils and you can make a decent return, you're covering your monthly nut and get a little bit more on top of that to either go into an emergency fund or just, that becomes mailbox money for you. Stuff does work out pretty well here. So we started in Chicago. And then most of Ryan's portfolio was in the Southeast, post like the retail and office, apocalypse in, 2010, 2012. That's where he originally started his career, but figured people don't always need a place to shop, but they always need a place to live.
Yeah.
I think that's where the residential space has just exploded over the last 10 years. So a lot of the Southeast. And then as the two of us have started to go through dispositions and all that stuff over the last several years, still maintain a presence in the Carolinas. I like the market a lot.
Yeah, me too.
Greenville, Spartanburg, Raleigh has seen through the last couple of years. Durham's, I think, starting to follow in its footsteps. Charleston's gotten really pricey. Although we looked at trying to buy a bunch of stuff there probably about 5 to 7 years ago. But still a big fan of the Carolinas.
Yeah.
I think you're close enough to some northern big cities, but you still get, a bit more of a temperate winter. You can be pretty close to both the mountains and the ocean. You can't beat it.
Yeah, and from a general insurance perspective, I think that the Carolinas are like a little bit more weather safe than some of the southern towns. Obviously, maybe not if you're talking Myrtle Beach right on the water, but like still, I just feel like overall the Carolinas are like much better. Like to me, Florida, obviously, insurance premiums have gone up, but Carolinas, I guess, pretty steady at this point.
Yeah, I would agree. I mean, anything coastal, anything within 5 miles of the coast outside of obviously Florida or, Harris County or Southeast, Texas or Southern Louisiana. It's a pretty safe and temperate market for us. But that's, I think that's what differentiates a lot of Obie. We're an instant, insurance technology company that can provide instant quotes throughout the 50 states. Obviously some limited capacity in Florida. I'm sure a lot of your investors are in that market down there. It's a storm, no pun intended, for a lot of reasons. We can certainly get into that, but that's the differentiator. Ryan and I started this because I had a background in insurance, and both of us just got really sick of that, right? The biggest thing people tell us is insurance is one of their largest annual line item expenses, but the one they feel like they have the least amount of control and insight into.
I'm thinking back, I agree with that.
Yeah, right. I mean, it's just it's a centuries old industry, and it really hasn't changed. And it's no fault of your specific agent, but if you think about it, as as a homeowner or as a car owner, like we just buy insurance, we have to get it. Maybe we overpaid for our house or whatever, but this has some sentimental value. You look at your investments as an actual business, so you care about the line item on that P&L. And how much you're paying for insurance. And the problem is that, if you want to go to an agent and you say, hey, go get me a quote, or you go to a couple agents, they send you back a PDF. There's so many different variables and there's so many different combinations, right? Maybe I want a lower deductible and I'm willing to pay a little bit more, but I'm going to use that insurance if something comes up. I'm a little bit more risk averse, and that's fine. Right. But maybe you also want to see what a $10,000 deductible looks like, right? You're in a safe building. Maybe you're in a condo building. You're willing to take that risk. Maybe you want to change some of those endorsements. You want law and ordinance coverage or loss of rent or any of these other items. Every single one of those combinations, that agent has to go back to each one of those carriers and basically individually pull each one of those. And it was mind boggling to us, right? In an age where technology can allow you to dynamically see what these price changes are, I wanted a real estate investor, and I wanted myself and Ryan as well. We wanted to get to the end of a purchase process for insurance and be able to just play around with those numbers. How do they fit with our own pro forma? Right. And so that's really where the origin of Obie started. Is we wanted to provide people with a way that they felt like they were in the driver's seat. They got to the end of their quoting flow. Their agents can also use Obie as well, but they get to the end of the process, and then you can play around as much as you want. And then you can instantly throw in your credit card, bind that coverage, and move on with your life, right? Like the normal average quote to bind process for people is like 5 to 7 business days. You can go through Obie in as little as like 2 minutes.
Yeah, I think it's important that you have these kind of like meetings to check up on a portfolio, especially like the more units you have. I like remember times where we had so many units and they probably just like all random, they were in different states, different insurance. We're just taking whatever they said. We're just like, I guess so. But this is like a more holistic approach, which suits, the podcast, which is the mindful approach to real estate investing. And I do think it involves technology now. I'm not like a big AI person, but I like technology because it's advancing the way that we can do things exactly as you described for Obie. If I can scroll through like in my own time at 11 o'clock and not have to call someone, push some buttons and see, and then confirm it with someone later, and then build a portfolio where I can get some expert advice. Well, hey, these 3 have higher rates. Maybe we move them into a master policy like that. That's invaluable. Those are the things that save you so much money over the years. And I guess it really helped that Ryan had created this big portfolio that you could kind of see what you were going to do just based on what he had as well.
Yeah. I mean, you hit the nail on the head there. I think, so many folks And it's accidental, right? You get to your second location, your third, your fourth, you're buying insurance to coincide with the closing date, right?
Right, exactly.
But 3, 4, 5 years in, Jonathan, like you're sitting there and you're like, wow, I got like 12 insurance renewals spread out across
Right, exactly.
a ton of different months. Some of these are with carriers that don't like set up auto pay. Some of these I got to like send a check in. Like that's brutal, right? And for like a mindful investor, what are the ways that you can also decrease the mental load that you have, right? Like I used to be the type of investor early on where potential maintenance issues or something going on with a tenant or a property, like that's just stuff that would keep me up at night, right? What are the things that I can take off my plate? One of those is, hey, what can I schedule, right? What kind of technology can I use to automate the leasing process? What insurance technology can I use? And to your point, we wanted to build something where you could sit on your couch on a Saturday morning and buy insurance, feel really good about it, while also not having to necessarily talk to anybody. Now we have, at least at Obie,
That's like my
we
dream.
have people, right? Like and that's the way the market's going, right? Like nobody likes insurance. I don't like doing my own, home and auto insurance renewals. But if you can make that process a little bit easier, if we can, we integrate a lot of our technology into like loan origination software, and a lot of the lenders that are in the space, a lot of the property management software platforms that are out there, just to make it easy.
Yeah.
Right. If you can at least check the box on something that's not exciting, right? Like getting the mortgage done, closing on the property, getting your tenant in there, collecting your first rent payment, like all of that's the exciting stuff. Setting up the auto pay on your, your trash and your water and your city gas and your insurance, like that's not great. But if you can put that on autopilot and feel good about it, that's a win. That's how you start to at least change the overall feeling in the market around people's insurance process.